The Lloyd's of London insurance market swings back into profit in the first half as a lack of natural disasters cut claims by nearly a third. The group's chairman, John Nelson, joins me now. Morning to you, John. To what extent is insurance generally insulated from economic downturn, would you say?
Well, the level of insurance premiums coming in is relatively insulated, not totally. Obviously, in the long term, if there's a reduction in economic activity, particularly in the lines of business that we do, which is mainly commercial, i.e. B2B insurance, then gradually you would expect the demand levels to reduce. But by and large, the type of insurance that we do for businesses is largely compulsory.
What sort of claims exposure do you have to a breakup of the Eurozone?
In terms of the Eurozone, the level of business would obviously be affected, as I've said, if the Eurozone dislocation caused some deep further recessionary pressures. But in terms of the short-term impact on Lloyd's and on insurance premiums, I don't see much impact. In terms of our balance sheet, we hold liquid assets to support the payment of claims, and those assets are not held in long-term type investments, rather like life companies. They are held in cash, corporate bonds, sovereign bonds, and we've been very careful over the last few years to reduce our exposure to the exposed part of the Eurozone to minimal levels.
And these claims you're talking about, are these what you call D&O policies, directors and officers policies?
Oh, I see. In terms of directors and officers, that is obviously a significant business line for Lloyd's. I don't think the Eurozone per se should cause a huge impact on D&O. Obviously, some of the financial issues, financial scandals like the LIBOR scandal could, but I don't think the Eurozone itself will cause pressure on D&O.
How likely is a breakup, do you think?
Well, my own personal opinion is that the major structural problems have not yet been solved. The Draghi plan of July and subsequently obviously is helping to increase confidence in sovereign bonds in some of those southern European territories. But my own view is until you have more unification in terms of monetary, fiscal and indeed political policy amongst the Eurozone countries, it's very hard to operate a single currency, as we've seen.
Stepping back, sort of bigger picture, why are insurance and reinsurance prices rising so sluggishly given the number of big claims we saw last year? And how big a problem is that for the industry in general?
Well, in the areas where we suffered very significant losses last year, say in the Far East, the rates have gone up significantly. In most of the rest of the industry, it's been pretty subdued. The reason for that is clear, that with investment returns so low, if you look at our own returns on investment, it's about 1.2% in the first half year, then capital is looking for extra return, and it is looking particularly in the insurance sector. So there's no shortage of capital. So the supply side for risk transfer is in one sense very healthy. In another sense, it means that rates remain subdued. However, with investment returns so low, it's very important that the underwriting discipline is kept. And I think by and large, as we saw in 2011 and indeed the first half of 2012 at Lloyd's, we have kept that discipline.
How frustrated are you by the delays in Solvency II and the amount of money that you've spent already?
Well, we are frustrated by the delays. We would like Solvency II to be introduced. I think it looks as if it may be delayed further. We ourselves, though, are ready. We are actually introducing the processes for Solvency II in January 2013. We at Lloyd's have spent £300 million on it. The industry here in the UK, the estimates are about £2.5 billion. I mean, it's big sums. But from our point of view, Solvency II, we believe, is a good system. The process for capital setting under Solvency II largely reconciles with what we've been doing for the last few years.
All right, John, many thanks for talking with Reuters today. John Nelson, chairman of Lloyd's. Stay with Reuters on the Insider platform and Reuters.com. We'll look ahead to Spain's 2013 budget, a major test for Prime Minister Mariano Rajoy. I'm Axel Threlfall. This is Reuters.